Hello traders, this is Rich from Tradesight. This is the market preview for Thursday, March 6th, 2014. Well, today we had kind of a measuring day by really all definitions. We had the S&P closed within 1 point where it closed yesterday. The NQs were up 11.5 and the Dow was down. So all in all, net, very much a wash. If you look at the advanced declines, we're plus or minus only double digits. So there was not a lot of influence exerted on the market by either the bulls or the bears. So let's take a look at the futures charts and see what they have to tell us for tomorrow. Here's a look at the ES futures. So you can see that that 8-ace level at 1875 is definitely the sheriff in town and really controlling price right now. They hit it a couple of times intraday only to play whack-a-mole and to kind of reject it and repel it initially from that level. So net we had a very tiny range doji day. You can see it's one of the smallest ranges that we've had all year. Generally these little doji days at range high are not real positive, but we'll have to see how this all plays out. 1875 obviously is the level to watch right now. If we do break out to the upside, 1906 and a quarter is going to be the big level, and then below that's going to be the gap window that starts at about 1862 and a half from the previous session. Moving on to the NQ futures, kind of a similar pattern, but we did expand the range to the upside and did close above the open decently. So definitely a much more positive day on the Nasdaq side, even though it's somewhat similar. We do have a little space before we get to that 8-ace level at 3750. So that's going to be the next level to the upside. To the downside, like the ES side, the gap window starts, and we got to keep an eye on 3705, which will open the door to the 10 EMA, and then the gap fill if we roll to the downside. The Dow was down 35 on the day, which is classic measuring day here. We had a range expansion candle off of this previous swing low to the upside. I'm just measuring off right now. Didn't make a new high and closed well above the top half of the range. So if we do break out to the upside, we're going to put in play the static trend line here off of this 9-bar drop. That's this green line. To the downside, the 4-ace level at 16,250 is going to be the key one to watch. Let's move on to the bonds now. Bonds had kind of a more of a measuring day too. They expanded the range to the downside just a little bit, so it's not a classic inside day, but we did play out below the bottom half of the previous day's range. So for now, this reversal candle is still in play. Keep in mind though that we do have a little unfinished business here on this chart because we're 12 days up, but don't quite yet have that 13 exhaustion from the seeker signal. So if we do roll back up here to the top side again, we're going to get a 13 exhaustion up here. Certainly the one thing that was really moving on the day, and the one that was really in motion, were the oil futures. Big down day after putting in this king and queen pattern, which is a reversal pattern the previous session. So big break to the downside. We talked about the king and queen yesterday, so that definitely should be no surprise. But potentially flipping price to the downside here. We settle below the 10 EMA for the first time and follow through below since this 9-bar drop. So this is really a pretty big development. This could be reversing the gold chart. Granted, we have to qualify this with a follow through and get at least one tick below the previous day's low. But if we do that, we're going to be short-term negative here and then start talking about the lower levels. First of which will be the 4-ace level, which is going to be important because it lines up with the 200 DMA at $100. Gold futures didn't suffer the same fate as the oil. The gold futures are still kind of positive here, hanging above the 10 EMA. We're only 6 bars up in the exhaustion count, so if we get going a little bit more, we could definitely get that 13 exhaustion. That 13 exhaustion would be really interesting if it coincides with 8-ace here at the 1375 level. Here's a look at the 10-day trend. The 10-day trend started to roll to the downside. We closed below kind of the midpoint here. We're down at 1.04. Remember, if we get to this 0.85 area, we're going to be recording an overbought reading. We had a daily close of 0.78, which is decently low. And the key thing here is that that closes below 0.85. So that'll be in the average for 10 days. So we got to keep an eye on the trend rolling to the downside here and recording that overbought reading. We haven't even exceeded the previous low here, so don't get excited just yet about getting overbought just yet. But if we do record that, we'll check in and talk about that. All right, moving on to the individual sectors. The XAU is a top gun, the defensive sector. The consumer-related equities were pretty strong, getting a little bit of a relief. They hit a lot of the equity stock, the commodity stocks pretty hard the last couple of days, so we're getting a little bit of a bounce there. Dow Jones transports were pretty strong, and that's a good sign there at this point in the cycle. The XOI was fairly low on the list, as is the OSX. If we had the OSX and the XOI a little bit higher on the relative performance chart, that would be a little bit more positive, but really didn't get that. The utilities were last lagger, the housing sector was weak, and the telecoms were also underperforming the market. Let's move on and take a look at a couple of the key charts. Here's a look at the XAU, still holding above that 8/8 level, potentially forming a handle here off of this cup formation. Got to keep an eye on that. This could be pretty important, and start to put these more overbought areas into play, and take this quite a bit higher. Could easily get up to plus 2/8 at 106.25 if we just get a little more of a nudge to the upside. Looking at the transports, we're 9 bars up now, which is kind of key, and also into that 8/8 area at 7,500. So expect some pretty stiff resistance here in the Dow Jones transports. So not really looking for longs here right now. Semiconductors were kind of middling here. It's still kind of just gaining this plus 1/8 area. Still short-term positive. We had this one little close right at about the 10 EMA, but never followed through below it. So for now, we're still positive here, and potentially putting this plus 2/8 level at 578 into play. BTK index was a classic doji day. Really wound up with energy here. We've got a really extended run to the upside. Now we've got 2 days here where we've just done nothing. A little bit of a bounce back 48 hours ago, and then this past session we were inside the previous area. So if we break out of this one way or another, this is going to be a pretty potent move, so keep an eye on that. Oil services index underperforming the market, finding resistance at this 4/8 level as should be expected. We're only 6 days up here on the secret count, so there's plenty of room to run if they can cobble this thing together and get it going to the upside. If this 4/8 level proves to be too much, as it did here back in December, this 2/8 level is going to come into play after we take care of the 10 EMA. All right, folks, as always, thanks for listening. This has been Rich for Tradesight, and please, if you find these videos informational and value added, give us a thumbs up. Thank you.